Hello and welcome to IndianMoney.com's YouTube channel. My name is Fayaz. The financial year end is very close, and we all know that during financial year endings, we all have a lot of works. We all have to probably extend our work timings also in office because we have to basically create a report, prepare a report about the company's revenue, company's losses, company's gains, company's profits, overall company's performance. But have you ever wondered or have you ever done a financial audit of yourself? Yes, you and me can also do a financial audit of ourselves and to understand what has our progress been in the past 1 year, and we can probably build our new portfolio, or probably we can do a little bit of changes in our financial expenses as well in order to become a much more richer version of ourselves. So in this video, we'll understand how can we do a financial audit of ourselves. So without further ado, let's get to the point. The number one thing that you have to do is that you need to make a list of all your assets. That's the first most basic important thing. Just like how we have a balance sheet where one side we have the assets, the other sides we have the liabilities. So similarly, you have to make a list of all your assets. Assets are anything that help you make money. Assets can be your properties, assets can be your investments, assets can be your stock holdings, your mutual fund investment, your PPF investment, etc., etc. Wherever you have put money, and basically if at all it is helping you to make more money, that can be called as an asset. So you can make a list of all your assets that you have created or that you are maintaining in the past 1 year. The next in this list will be the list of all the liabilities that you have created. Liabilities are basically all the commitments, all the expenses that you have to do, which are basically getting revenue or getting money out of your pocket, out of your bank account. It can be to pay off your loans, it can be to pay off your credit card bills, it can be to pay off all your expenses, which are basically something that you basically owe this money to someone. It's not the money which you basically are using in terms of the expenses. That is secondary, that's another point. But in this, we are basically talking about the loans or the money that you owe to someone. It can be the personal loan, home loans, credit card dues, education loan, etc., etc. Or the money that you probably have borrowed from a friend or a colleague or a family member that you have to return to. That all basically will be under the column of liabilities. The third thing over here is the exigencies. Now, what do I mean by exigencies? Exigencies are basically the expenses that cannot be avoided. These are regular in nature and they come every month, every year, every quarterly, every half yearly. The certain examples of exigencies can be your child's education, it can be your school fees, it can be your electricity bill, it can be your rent, it can be your internet bill, it can be any of the bills which are basically one of the prime expenses of your livelihood. And these are some things that cannot be ignored, that cannot be gotten rid of, and you have to basically deal with it in order to maintain the lifestyle that you are maintaining. The fourth thing that you have to keep in mind is your financial plans. You might definitely have made certain financial plans about yourself. It can be the short-term goals, the mid-term goals, or the long-term goals. Short-term goals can be something that you want to achieve in the next 2 to 3 years. Mid-term goal can be something that you want to achieve in the next 5 to 6 years. And long-term goals are goals that are basically more than 15 years or maybe after your retirement, etc. So you have to allocate your funds in a way that you're taking care of all these different kinds of expenses, all these different kinds of plans. It can be short-term, mid-term, long-term, etc. And that's how you'll be able to have a very healthy financial portfolio. And last but definitely not the least, you have to also keep in mind the protection aspect as well, the protection net as well. Just like how every particular country in this world, irrespective of whether there is a war situation or not, they spend heavily on the company's defense in order to take care of the worst case scenarios. Similarly, you should also take care of your worst case scenarios. It can be any accident, it can be a death, it can be any other such incidents which we probably get a little bit awkward to talk about, but you should always be prepared for them. And that's the reason why we strongly recommend that you should take up a good health insurance, a good family floater plan, which can take care of all your medical emergencies. And also you should have a very good life insurance as well. Not only it will protect your family after you, but it will also take care of your taxes as well. You will be able to save certain tax amount also if at all you have good life insurance and health insurance in your financial portfolio. So if you found this video informative, make sure you leave your feedbacks and thoughts in the comment section. And if you did, please do like this video as well so that you can let us know that we are doing good. And if at all you have any feedbacks for us, please do let us know about that also. And if you want to learn more about personal finance, career building, farming and business, you can always download the Financial Freedom app. The link of this app is provided in the description box. My name is Fayaz and you're watching IndianMoney.com.